So I would like to follow up on how he introduced me. So introducing myself. So who is Ray Hatoyama? Most of the people here don't know about me. And if you Google Stanford University, you can have my bio. But to make it short, so I'm specialized in brand and marketing. And I'm specialized in media technology and also globalization and corporate governance. And to give you my shortcut of career, I started my job, as Richard mentioned, in a big company called Mitsubishi Corporation. So I was mostly doing business in Japan, and I didn't have so much global experience on business. And I was involved in Lawson, which is the second largest convenience store. I was doing music download service in the biggest record company called Avex. I was trying to sell a lot of animation from Japan, like Pokemon, Studio Ghibli, which is like a Disney in Japan. But mainly my job was inside Japan. And then I had chance to come to US by going to business school. And then that really transformed my career. And then after that, I took the opportunity to work in Hello Kitty company, which is Sanrio, and they had an amazing experience over there. And together with that, I also had an opportunity to work at DNA, which is one of the largest gaming mobile company in Japan, as an independent director over there. So I started to learn and execute my corporate governance career as well too. So I was really fortunate, not just because I had a business opportunity to do, but I had a lot of experience with celebrities, like you know him, like Dwayne, he's the wrestler. I had with Russell Simmons, with Gene Simmons, with Paris Hilton, like Jeremy Scott, who's the designer for Nike and Adidas. Of course, Hello Kitty herself, like Japanese model, Katy Perry, like like Gene Simmons himself at her house, like the sister of Paris Hilton, like Nigo and Jonio, who is the designer for Undercover, like Bo Fling, he is the movie producer in Hollywood, like so many. Yoshiki, yes, famous DJ, Mr. Tanaka, and Pharrell. Pharrell is, I think, you can refer as the best music producer. And also I had experience to have business relationship with today's guest, Ishiguro-san. She's one of the celebrities in Japan. She does a lot of, she owns her company and she does independent board of directors for many listed companies in Japan as well too. So what did I do in Sanrio? So this is the financial result. So I entered right after 2008. And after that, as you can see, the sales and also EBITDA and also net profit, ROE all increased. We had CAGR 30% increase in business for these 5 years. And how did I do that? So it was change about the mindset. So Hello Kitty was really something I knew that it can go global, but the company was a very small Japanese company. I needed to take that mindset to globalization. And also I did a lot of changing strategies, which is for growth and sustainability. We were usually doing business by retail ourselves, selling our products, but we changed it to partnership, licensing mainly in the abroad. And then we also localized many things, not just the operation, but design, management, and the team as well too. And also we already knew that there was a market in the US, Europe. There was a market to capture, which we haven't really tapped into. And also we needed high discipline. We needed to grow. This kind of mindset was very important. And of course, we needed to start new initiatives, such as how are we going to manage the digital world, such as technology, media, but also going into movie, something like Netflix as well too. So as Richard mentioned as well too, I think many people, yes, believe that entrepreneurship is startup. You need to start your own thing. But I think for me, of course, there was a chance to start a new company as well too. But the journey I had with Sanrio and the turnaround situation as well too, for me it was an entrepreneurship. And I wanted to elaborate on that after I left Sanrio and Hello Kitty business. How can I really utilize what I have experienced? So that's what I'm doing now. So I have my own consulting firm, and also I'm visiting Scala under Richard as well too. But I'm also on the board as an independent director, non-executive online, which did the biggest IPO last year as a tech company. And Pigeon is a baby bottling company. They have almost 80% share in Japan, but also 40% in China, 60% in Korea. It's one of the biggest baby bottling company in the global level. And Transcosmos is the biggest call center and back office function outsourcing company in Japan. And also Sozo Ventures, which Richard also touched upon, 250 million venture capital here in Silicon Valley. So that's what I'm doing from last summer. So I would like to start today's conversation with Japan. So many of you know Japan, but some of you might not. So Japan, so why Japan is a little bit different from the other part of the world. So Japan, as you can see, it's an island. So it's separated from other countries. And then you might remind sushi, like ramen, and also like Kobe beef. So food, everybody knows about it. But there's also other aspects of Japan as well too, like Pokemon, like in Super Mario, and also Hello Kitty, which I have been devoting a couple of years in my life. But I think to go back to economy, so it has a population 126 million. So it's one of the biggest, 10th biggest largest in population. But also it has the GDP of 5.4 trillion. In PPP or nominal, it's 4.8. So it's a big economy still. Yes, and many people have, I think, positive and negative image of Japan. So some of the positive is I reinforce that it's still one of the largest market in Japan. There's a lot of techie people. There's millennium generation in Japan as well too. There are a lot of early adopters. They like details. They are well serviced. And also, it's going to be a complement for many US companies as a market or as a service or as a business as well too. Meanwhile, I understand that there's a lot of argument about Japan is slow in growth. And also, they missed a lot of opportunities. For example, Japan, some people argue that they could have been the second largest or one of the largest market, but it's falling down. China is growing. And also, if you think about manufacturing, Japan used to be a very detailed and techy company, a country itself, but many people argue that isn't it Taiwan or Korea right now. And also, many people in Japan is conservative. That is true. And as I already touched upon, there's a lot of competition in Asia. Many people see Japan as one country, but why don't they think about China, Korea, Taiwan? But I truly believe that there's a lot of interesting points in Japan. And I would like to touch upon a couple of other things which is really special in Japan. So for example, people don't change jobs. Amazingly, they don't. So this is a chart of hiring and turnover rate. So this is for the data I pulled out from last year. And as you can see, especially in 30s and 40s, only 7% or 8% people change their job. That means probably like 1 out of 12 is a person who is going to move over. But here in the US, if you're in the 30s, maybe you have like changed 2 jobs, 3 jobs, or maybe more. So this is a very interesting indication because people try to find talent in Japan when they go to Japan, but they won't just because people just don't change jobs, especially when they grow. They tend not to move. And this is same for females as well too. There's a little bit of high amount here, but basically it's the same. People tend not to change job. And also people still choose conservative companies. So if you see the list, I saw the job hunting list a couple of days ago, Toyo Keizai. And the first is, everybody wants to go to the bank. Mitsubishi, Mizuho, or airline, security company, traveling, insurance. But all of this is mostly basically well-known big companies. And the industry they're going into is basically bank or insurance or airline. So you can see how conservative it is. And also this chart hasn't changed so much in this 10, 20 years. So this is a very interesting list, but this is the fact we have in Japan. Yes, when you look into going global, of course, there's a lot of elements. I just listed, I'm not going to go through every list. But there's, of course, difference in style, how you work, context, difference in value, difference in not just, I think, management, but business model. There's so many language, HR. But I think what I want to say here is, however, people in Japan is looking for innovation. This I think I see a lot of changes, especially in these couple of years. Even though you might think in the surface it's really something conservative and nothing has changed. So one good example is Pokemon Go. So Pokemon is a company who has gaming and character as well too, but they partnership with Niantic, which is a startup here, which is a spin out of Google. And you already have seen how it has influenced the world. It's a new game. It did something very different from traditional gaming, and people loved it. So I do see sign of changes. And then, this is today's topic. So change in the boardroom and changes in investment. So I first like to start up with boardroom. So the board role. Some people are familiar with board. It's board of directors. But I just want to go over what the board is supposed to do. So first of all, they need to have strategy. Company needs to have strategy. And the most important things the board needs to do is they need a strategy to increase the value for all the stakeholders. When you say stakeholders, sometimes people say about who owns the stock, but it's also about not just the stockholders, but I think usually there's stakeholders all over. For example, consumer is one, the people you work is one, society is another. So there's a lot of things that you need to think about. But I think it's not for the sole interest of the CEO, or it's not the sole interest of the people who are working. It's also for the customers. So how do you really have a strategy to align all those stakeholders? That's one of the important role of the board. And secondly, reduce the risk. Because this is you need to have a sustainable business. You need to have a sustainable companies. Of course, there's a lot of risk you can take. But one of the things you do at the board level is minimize the risk. People talk about, of course, taking the risk, but it's usually the opposite. How you really reduce the risk to have the sustainability. And you need to sometimes make tough decisions. Sometimes you cannot do by yourself. So people with the team, you make tough decisions here. And also, you need to choose and fire the CEO. That's the people who are going to really lead the company. But you need to really have that assessment. And also, you need a succession plan in case you need to change that CEO. And lastly, some people say board is or the corporate governance things, but the company needs to innovate. And that's one of the important roles of the board as well, too. You need to innovate. And how does typical board member look like? So I have two examples. One is Walt Disney. This is one of the greatest company in the U.S. And I also have Toyota, which is one of the excellent company in Japan. And how Disney looks is, for example, this is from their website. So you have people, some of the pictures you are familiar with. So you have, for example, like Jack Dorsey from Square and Twitter. You have people from Facebook. You have people from Nike. You have people from Eli Lilly. You have people from Starbucks, all those CEOs. And the only person here who is the executive in Disney is Robert Iger. So other than him, basically, when you say the board of directors, you collect other people from other companies. So this is how Disney board look like. So how does Toyota board look like? So this. So this is the board of Toyota. And I didn't look into all of their resume. You can click it and see what they have been doing. But most of the people you see is, I entered the company in Toyota in the 70s, and then I have been working for years and years and years. And you don't see any other people from outside the company. There might be one or two, but I don't know. I didn't check it all, but this is how it looks. So I'd like to ask you, so what's the difference? Did you see some difference? So anyone, yeah, please join me. So yes.
The diversity, I guess?
Yeah, diversity, yes. Very different diversity. What else?
Well, you said Toyota, those are all Toyota managers, so it's very insular, very internally focused.
Right, exactly. It's
Disney's the opposite. Only a single manager is on their board.
right, exactly. Toyota is very internal. Meanwhile, yeah, Disney is external. Yes.
Cultural memory and deep knowledge of company in Toyota.
Culture and deep knowledge inside Toyota. Yes.
It looks like Toyota is inward-looking. Disney is looking outward, perhaps to expand markets or new creative ideas.
Yes. Toyota inward, Disney looking outward. Yes.
Toyota has many members.
Toyota has many members. Yes. Yeah, definitely. Yes.
They have many members because they are afraid to make decisions.
Afraid to make decisions, so they accumulate a lot of people. Great point. Yeah. Anything else? Yes. Yes, I think those are the great points you see. So the difference is yes, internal versus external. So definitely Toyota is internal board. Meanwhile, yes, Disney is looking external, and other people are external. And there's difference of executive and non-executive as well too. People in Toyota, yes, they have deep knowledge about what they do. Yeah, because they've been in Toyota for maybe 30 years or maybe 40 years. Yeah, and the culture as well too. They're executives. Meanwhile, I think Disney, there's almost none of them other than one person. And also the size, definitely. So how are you going to make a decision with 40, 50 people? Meanwhile, yes. You don't. Yes, exactly. Yeah, that's what is happening. And also, yeah, composition and diversity. You saw a lot of diversity in Disney. Meanwhile, so Toyota, you don't see any of it. Yes, and this is, I think, the change you can, difference you can see on the surface. But more in reality, how do you conduct the board meeting? Yes, you're very, very right. So, in one sense, I think Japanese people or Japanese board, usually don't make decision, and that's I think one of the things. What was board meeting supposed to do versus management meeting? Because usually in a meeting as such, there's a weekly meeting, there's a monthly meeting, and everybody in that meeting is the same as the board meeting. So you do the discussion on different kind of meeting with the people, under you as well too. And then basically, yes, the board meeting is more, isn't something for reporting or like checking something, but it's usually not for discussion. Some of the board I have observed for big companies, it ends in 5 minutes. Yeah, they don't have discussion. So that's a great point. And also, I think point of view and sharing information. When I joined a couple of other new companies on the board, I asked a lot of questions. So how are we going to decide about it? No. I already decided about it. We did the monthly meeting. We did the weekly meeting. We discussed it about for 3 months. And you're asking me a question. Why are you asking that right now? But then how can you really fulfill the role of the board meeting? So I think it's very, very difficult in that kind of organization or the size and also composition of the board to share the information or really make a different point of view. And also, I think it's about the process as well too. So as I'm already touched upon, the discussion, the decision-making process, usually in the U.S. Or a lot of corporate companies who have corporate governance, they put it in the board, not outside of the board or before the board. So those are the things that you still see difference, even though I see a sign of changes. So the board experience I had, Sanrio, DNA, Transcosmos, Pigeon, and Line, some of the companies are new. For example, DNA, it's only 10 years plus. Line, it's listed last year, but it was founded in 2011-12, so not so long. Meanwhile, Sanrio, Transcosmos, Pigeon are almost 60 years old companies. So there's a lot of very different dynamics among the board. And in the new board, usually, for example, DNA and Line, we only have 5 people, 6 people. We do discussion, and also I've changed a lot. So as I mentioned, initially I was asking to the board of Line and DNA. So I have questions. But as I mentioned, they said, no, this is already decided. But I reversed all the process that I can be involved in that. Initially, they asked me to attend weekly and monthly meeting, but that was ridiculous. I stopped it at 2 months, but I did try that, but that was too hard. But instead, I reversed that decision-making process will sit on the board. And also Sanrio, Pigeon, and Transcosmos, sometimes it's very, very difficult to speak out. Because you saw the board meeting, board member of Toyota. There's a lot of people who's been in the company for 30 years, and you're suddenly coming in the room. So imagine, so this is exactly the number of the board member. I come in and say to you that you guys are wrong. Yeah. Crazy, exactly. And the next thing you are said that I don't need you, so please go out. So to make an effective board, it's very, very difficult in reality how to enforce that. And yes, it's really hard to be the odd one person, but that's what I've been doing. Interestingly, yes, there's of course difference between discussion and reporting. People focus on reporting, but yes, definitely there's going to be a change when you try out some. I tried to speak one, the next time 2. And then, for example, last board meeting I had with Pigeon, I was speaking an hour. It was supposed to end in an hour, but I had 2 hours. So people start to accept. Why do they accept that? Because it's a kind of regulation. It might be not a willingness. So Japan changed the regulation that listed company needs to have 2 people, at least 2 people independent on the board. So when I was bored just alone, then it was really odd. But once you have 2 persons, the dynamic changes as well too. Especially on the board, you have like 15 members. Then 2 people is enough to start to say something. And all those kind of things is going to be, I think, written in agenda. So you start to have an influence. It might be not a willingness from the company, but at least those kind of things are making Japanese company really diversify. Yes?
In my experience with engineering management is that for the most part, they're always interested, but they always turn to the ranking member for approval. I can always see that. So how would that be different at a board level?
Yes, that's a very interesting question. Yes, so basically the ranking matters, not just in ordinary company, but especially in Japanese company, engineering as well too. So they seek for high ranking to have an answer or have an agreement or have an approval of what they do. But I think there's two things I did for that. So one is you define what is needed to talk on the board. And of that topic, the board has the decision making. So I have led some of the company not to make decision on management level or weekly meeting. So this topic definitely needs to be discussed on the board. So you cut the line, so those topics automatically, systematically comes into board. So I can have a say or have a discussion. And so I think basically what I'm saying is you can change the process. So as you mentioned, yes, as a custom, yeah, they tend to ask the highest ranking people and get approval and everything is done. But that's not governance. If you want to buy like a 6 billion company without a sign, that doesn't happen. But the difficulty is if it's 10 million, it might happen. But you definitely need to have, I think, a rule on the process, what needs to be discussed. And in that scope, you will discuss on the board. But you really need an energy to change that. And secondly, I think it's not always about something positive. Sometimes it's very negative thing, like problems or issues with manufacturing or issue with consumers. So, and one of the things I raised, what is needed in the board level is the risk management. So those kind of things as well too. I implemented a lot of those companies, the system, if there's something wrong, you need to report to the board first. Not talk to your senior manager and try to hide that. And that was what Toshiba was doing. So I think there's a certain way to manage that and cope with that on the board level. And a lot of things that have changed, and I never thought that I could change, to be honest with you. I joined the board of DNA, and to be honest with you, the first board meeting, they said, I don't want you to speak. It really happened. And I didn't speak for 3 months, but gradually I grabbed the trust and started to say things, and then started to influence things, and then somehow it went well. But I see a lot of signs of changes. And the people who saw that I was effective in DNA started to say, why don't I join the board of other companies? So I was invited from many companies, Line, and also from Transcosmos, and also from Pigeon, from the recommendation from the financial investors. I didn't go there and I asked them to hire me. But reputation matters. And also if you do something to change, that will lead you to another change. Once again, I never thought that Japan would never change on those governance. I never thought I would be one of the members like Toyota's board member, but that's happening. And I'm like this, I'm like casual as I am today, and I'm still going to the board where nobody really wear other than the suit and white shirt. So yes.
Why are things that way and changing? Is it more of a cultural kind of a thing, or are there legal or regulatory kinds of issues that mandate they have these enormous boards and all that?
Yes. 3 slides before this, I was mentioning. Yes, it's a regulation from 2015. Tosho regulated that you need to have 2 independent board of directors, not all. So it's regulation.
Okay.
Yeah.
That's pretty small.
Right, exactly. Right. Some, I think, for some countries for diversity, they say over 50%. And some countries say you need to have at least 1 female. Some countries say you need diversification on color of your skin. So yes, diversification in Japan, yes, only one or two. So what does that change? I totally understand. But at the same time, yes, small changes will, I think, definitely change the dynamics. And I see that really flowing into Japanese corporate governance. That's why I think, yes, there's sign of change. Of course, I understand it might be small change, but it is a lot influential change.
Ray, can I ask, are you seeing shareholders pushing boards to do things more than they used to? Are there more activist shareholders now?
Yes, so activist shareholders, yes, it's increasing in Japan. Some activists say you need to change the board, you need to have this independent board of directors. Some people say, no, you need more dividend because you have cash in your bank. Yes, activists, I think they used to have, I think, low attention in Japanese market, but since there's independent director as well too, those voices tend to directly go into the board meeting. And once those kind of discussion comes, for example, to me, I can use that as a voice of stockholders, one of the stakeholders. And then I push that idea into the company as well too. For me, that's one of the things I usually utilize as a voice of outsider as well too, and change the corporate governance of how the company is operating. So I think that's a great point as well too. So yes, so for the time's sake, I will move into investment side of what I do. So this is Sozo Ventures. So it has been established. It's a fund established in 2011. So it has 6 years history of it, and it's not a typical venture capital. So what I like it is it's a feature of the support. So it's a venture capital who enables access to the market in Japan. And also we have a business development team. So basically we invest the company, but also we have help to really penetrate the Japanese market or make a partnership. And it's a win-win relationship with not just as an investment, but it creates a revenue. And also it creates a good return for the limited partners who put money in our fund as well too. And this is the kind of the portfolio we have in the past. So you can see Twitter, Palantir, Allpower, ServiceMac have been bought. Square became listed as well too. So there's plenty of company which is called unicorn type of company as well too. And you see a lot of venture CEOs saying, yes, it was useful. And so why do we need Japan? And what kind of option do you have? So once again, when U.S. company, it doesn't matter whether it's startup or not. Usually, yeah, they say, I want to have a 100% subsidy. But as I mentioned, people don't move jobs. So it's very, very difficult to hire people just because you can't really have a great talent. Usually, the people you find in the market is B or C type of people who has no future in the company, so they need to move. Or they are old enough, they are almost retired, so they want to challenge a thing. But it's not in the 30s or 40s, it's late 50s or 60s. So do you want to have that in the startup environment? I don't know. So we usually recommend formal partnership with joint venture, distribution agreement, licensing, cross-border, or if it's a digital solution, just do it cross-border. You don't need a subsidiary in Japan. Or yeah, if you have a great product, just do the marketing deal. Or if you need localization, let's localize with a partnership. And to do this, you need to understand the market. You need to find the right partners. And of course, you need to have a team to do business development. Additionally, you need a finance. So that's where we sit. So we finance, we help them build the team with the partners, and then find the opportunity in Japan and in Asia as well too. So I can say that it's a new type of BC because more than half of our team is basically business development. So we have a capacity to increase the business. And also it's a new vision with passion. We want US technology company to conquer Japan and Asia. And also we created new trend. After we made Sozo, there's a lot of fun following our fun to do these kind of things. But business development is not that easy. So we still have a lot of advantage on Sozo's model, but it's a new type. But other way to say, but to begin with, Japanese companies are looking outside for innovation. This is, I think, most important, but sometimes people are missing because we're talking about BC and we're talking about startup. But why do Japanese companies, to begin with, want the partnership with startup in the US or small companies all over the world? It's because they're looking for innovation. As you have seen, yes, Toyota has a big organization with a very conservative board, but they need to innovate. And they're looking for a lot of partnership outside of the country, outside of the company, and they can't carry that inside. So that's why they want partnership, and that's why Sozo can bridge that. So I think those are the changes you see. I think there was less eagerness to partnership in Japan maybe 10 years ago, but we are serious about it. Many Japanese companies are serious about it. We raised over 250 million, as I've mentioned. All of them are from Japanese company. They want to innovate. That's why they put money in our fund. So signs of the changes here too. So I have like 40 minutes left here. So I just wanted to open up for questions and discussion to the class.
Thank you, Ray. You mind if I join you up front? I want
Yes.
to see who's asking. Go ahead. Floor is open.
So just to understand in the area of changes, you say you go there, you look around, and you change things. What does it mean really? What is your procedures? What do you can understand how to try to activate the dynamics of the new stuff? What is the leverage to push on to say, okay, trust me, and we go.
Yes. So, so what am I really changing in reality? Maybe I'm not. Yeah, but that's a great question. So, and how am I exactly doing that? Yes, and with a couple of examples. For example, yes, it's videotape, so I don't want to touch upon something which is under NDA.
I might be able to say something.
Yeah, no.
Yeah, okay,
I'm just
okay.
saying that it might be ambiguous, but yeah, please. I'm very sorry that it might not translate well. But I just wanted to say that maybe it's not clear just because I'm trying to avoid something. Yeah, yes. But for example, when people are looking for acquisition, for example. So let's have a target. And then everybody is looking inside Japanese company. But I work here, I live here, so why don't we have a candidate here to look into the market as well too? This is a very simple, but very different dynamic. Just because you see the board of Toyota. Yes, of course, Toyota has a broad range of people who work in abroad as well too. But many companies, they don't. So you, for example, I was in the board of Sanrio, and there was 15 people. Nobody represented abroad, only me. So everybody wanted to do business inside Japan. And they're executive on those divisions. So you have like the executive from Slim Park, you have the executive from retail, you have executive from licensing, but all in Japan. So they want to put zero resource to abroad. So that was my initial situation. And it's very difficult to change the dynamics because everybody wants to focus on Japan. So why do we do acquisition in the US? They say, no, we don't want to put that. But at least those conversations start to think about what are we going to do on abroad. And I think, yes, it's subtle, but at least it gives a certain idea that we need to talk about abroad. And in a year or 2 years, the dynamic really changes. Just because I changed the business as well too, the profit, the sales, more than 50% is now from overseas. We were talking about it 2 years, 3 years ago. You said it was definitely a bad idea. Now situation changed. We are ready, so why don't we work on it? So I think many changes, you can't do it one day. But I think what I'm trying to do, or what I've been trying to have is, I think to a certain extent, take a long time. But in 2 years and 3 years, it's going to be different dynamically. Put some small ideas, foster it. And then when it grows, you push it. Yes.
So actually, my follow-up is kind of a question, too. In the time that you and I have worked together while you've been a visiting scholar here, you've brought me various kinds of ideas for business development for some of the companies that you're on the board of.
Yes.
And so I'm really curious if you see that bringing in new business gives you more clout on the board. Is that one of your reasons for doing this, or what's just sort of that's the responsibility of everybody on the board? How do you?
Yes and no. I sit on the board of 3 companies, but I advise 15 companies, which is not official, so I cannot say which company. And on the board, once again, the role of my role is to, I think, have the right strategy, and also have the sustainability, so assess the risk. And you need to think about the team, CEO, and all that alignment within the company. So the most of the work you do is not something fancy, which I enjoy as well too. But at the same time, when you advise or mentor the new startup CEO, you're talking about, I think, something very different. So you don't need to think about the risk. No, you should take the risk. I can say it loudly because I'm representing myself or my opinion. Meanwhile, when you're in the board, you can't just say what you think, or you cannot represent just your expert. Yes, I am professional on IP, but that's not the role. I need to think about the stakeholder.
Yeah.
Exactly.
Yeah.
Right. So it's really different how I act.
Okay, thank you. You go next.
It's like a follow-up question to that. So you've mentioned that you're on the board of 3 companies. You've been on the board of other companies, but you have these 15 companies that you advise. So why did you make that decision to take those 3? What was your thinking process when you were assigned or you were invited to these many companies?
Yeah, so why did I choose 3 companies? And why, yes, and why am I still choosing to advise companies? So, and by the way, I'm repeating for the video, so for the mic. And so, yes, that's a very interesting thing. I always had the dream, regardless of leaving Sanrio or not. I think this area, independent board of director, is going to be something different in Japan. So I was on the board of DNA way before the regulation was there. And I thought it's going to be something additional to my career, just because the increasing listed companies from young startups, they have experience on, of course, making a company, but they're still 30s and 40s. I was 30 at that time as well too. And they needed somebody to really assist that. But the only person who was on the list for independent directors were lawyers, accountants, university professors who are like, I can't say it in front of. I'm very sorry. No, I didn't have that intention. But of course, there's a very experienced university professors, but there are some who are not. Yes, but I just thought maybe my globalization, my experience, I can utilize that as a new wave in Japan. So I was really looking for that. So I already declared I'm going to do that. I think it was around 2012. So I was really looking for those kind of opportunity. And since I was raising my voice to have that position, I think many people started to ask me as well too. So that was, I think, one of the goal I really wanted. And I really believe that I can really innovate, change, influence the board, being one or two member of independent board of director. So that was a kind of the dream. But at the same time, I wanted to have my expert, which is marketing, branding, IP, to utilize that. And also, I see a lot of potential, not just Hello Kitty. There's many cool Japan items I want to bring into Japan, from Japan to the US. So I'm helping those kind of companies to go global, which has nothing to do with governance. And startups, you don't need sometimes governance. So that's a kind of the things I enjoy as well too.
Okay, good. You had a question.
Yes, I'm interested in the decision-making process with Japanese companies. My experience is that there is a huge resistance to talk directly and openly about problems. Decisions are made before they are actually made.
Right.
You indicated that as well. So, do you see a change? Because this goes very much to the root of the cultural change.
Right. Yes, I do see the change of decision-making process. Yes, it is true that people don't like to discuss in front of people, and they try to avoid the discussion. Every discussion is, I think, in the other room. That's still true. But at the same time, sometimes it's so inefficient just because you need to talk with 10 people in different rooms. And still, I think you need both. But at the same time, when you really have an issue or you really need a consensus, putting everybody in the room and talk about it is still, I think, the fastest and also effective solution. Yes, it's true that people don't like to have that, but at the same time, I think they get used to it. Especially, I tell people that I'm going to raise this topic. I did that in Sanrio's board so much.
You announce it beforehand.
Yeah, I announced it beforehand that I'm going to talk about it. So they really didn't like it. Yeah, and I was executive. I was not independent, but they said, no, I don't want to talk about it. And I just submit material I want to discuss about it. And they cannot avoid it. So I think the other way to say, if you have a courage to really wanting to talk about it, and the meeting is officialized, you need to talk about it. And I think it was very difficult to do that when you didn't have independent directors. Just because everyone is internal and say, what are you talking about? And everybody can hide about it. But if you have 1, 2 independent director who has nothing to do with it and hears something really weird or something they believe they need to discuss about it, the dynamic change. You cannot avoid the discussion. So I think, the dynamics is changing that way.
So that kind of actually comes back to what you had mentioned earlier about there being this sort of hierarchy. Even in a board, there's sort of a hierarchy based on seniority in the company. And here you are, younger than most of the people looked in Toyota anyway, and speaking up and that kind of thing. How?
I think
Just do it.
No, I think this is, fundamentally what independent director needs to think about. They should, and the independency of who you are, what you are. Of course, I'm taking the risk, I'm taking the responsibility, but I'm okay being fired anytime if they have objections.
Okay.
And also, if they don't have an ear to listen, I will probably leave myself. That's my attitude.
What I wanted to add to that is, you said, Roy, that Japanese companies are interested in outside innovation. So I've experienced, obviously, Japanese companies, and it's been successful sometimes and not successful other times, kind of depends. But now I'm visualizing myself coming into the board okay? And I wanna move on where they're gonna see something different, and I'm gonna say, well, let's talk about destructive industry concepts and strategies. Destructives, like Uber. Now, how is that gonna play out?
Not.
Are they gonna, I think, well, this is way over the top. But in fact, they could be at risk for being targets. And that may be very useful to them when that is gonna happen. And I'm curious to know,
Okay.
I see it as a danger in saying, well, am I gonna really try this, or am I gonna get kicked
The
out?
question about disruptive innovation.
Yeah.
Right. Yes, I think there's two things I need to say. One, yes, of course, to begin with, people internally doesn't think their business is going to go away. So they don't even think about something disruptive. So those topics doesn't come in mind at all. So
That's why destructive is so great.
but they don't think about it, so there's never a discussion or an idea about it, so you never talk about it. Yeah, and secondly, I think, yes, even with independent board of directors, sometimes, yes, those topics are sensitive and difficult. But at the same time, I think but I think on the agenda of the board, usually I think you should have some topics such as what is going to destroy our business, or what is going to be disruptive service or product. Those are the agendas usually you follow up yearly if you are on the board of, I think, US company or other countries. So I think one of the things I've changed is, so what are the 10 biggest risks we have? And one of it is, for example, disruptive service. And in fact, I did talk about destructive products at the second board meeting of Pigeon. So Pigeon is a baby bottling company. And for example, if you see a futuristic movies, so people like babies, they don't have baby bottles. They are born in a kind of cubicle, water in it, and so nobody really have a baby bottle. So what is going to be, so somebody in the company said, no, baby bottle, everybody is going to have a baby, and it's not going to be destructive, it's going to continue forever, so we are safe. That was one of the things I heard, and I said, oh, wait a moment. So in this SF movie I like, I don't see any baby bottle anymore. So what are we going to do in the next 20, 30 years if those kind of era comes? And people were like, oh my God, what is he saying? that was true. But once you start to say those kind of things and start to touch upon that, people start to look into technologies. And we did look into a lot of technology company, and we are doing new activities.
Okay.
So
I'm going to move over here for two questions. You go first, okay?
So what is the most benefit for US startups to make a partnership with Japanese companies compared to other countries, other Asian countries' companies?
yes, I think yes, there's a couple of tendencies I see. This is not just Japan, but mostly Asia as well too. Some people say that they are a lot easier to influence. And that means that's a bad way of saying. But the good way of saying is when there's a trend, people has a very high speed on adopting technologies. So if you have a
In Japan?
Yeah, in
Okay.
Japan. Like if you have a service like Line, and then you start it, and then you have the whole speed of penetration. It's not just, I think, the service, but I think it's a kind of technology thing as well to adoption. Once you are convinced, once market is convinced, it's going to go over the market very fast. And as it mentions, I think the market size is still big. You can generate the sales and profit from that market quite easily once you penetrate that. Of course, how to penetrate that, how to enter that is difficult, but once you do that, there's a certain market. And I think compliance, do you follow the agreement? How are you going to really take the risk on both sides? And also, I think Japan is quite consolidated in certain industries. So if you talk with one retailers, and then you have a certain big share. So I think there's an easiness of doing business as well too. So of course it depends on what industry you are, but there's a benefit for startups. So for example, we partnership with a lot of, I think, startup company. And when we introduced our distribution, easily they became one of the world's largest sales channel. So those kind of thing really happens.
Go ahead.
Thank you. I was amazed at Stanford Law Silicon Valley Directors Exchange last November 2015 that average board compensation for the Silicon Valley 150 biggest companies was nearly 300,000, 289,000 per board member, and that it's for the chair was 450,000. In terms of entrepreneurship in the boardroom in Japan, and from, say, the startup, from 0.0 to Silicon Valley 150, how does board compensation work in an entrepreneurship way?
I see. Yeah, so that's a very interesting thing. So board compensation for startups and for listed companies as well too. So most of the company I advise in Japan, they want to pay cash. Yeah, interesting. Yes, and most of the companies I advise in Silicon Valley, they want to give me stock option. Yeah, so when you think about, yeah, of course there's a difference on amount, but to start with, Japanese company, they usually don't have stock option. So but anything you have, I think the culture of Silicon Valley as well too, you're not giving the cash, but you're sharing and then the interest and also I think the upside of what's going to happen in the future. So the way I think they compensate in Japan is very different. And this is not just a big about startup, but it's same with the big companies as well too. I have no stock option program for any companies, listed companies. I actually asked for that. And many people argue that there's a conflict of interest. Independent directors shouldn't have stock option. So, yeah, you laugh, but that was what I was said. So I think the mindset of stock option is very, very different from country to countries, and especially I think the culture of Silicon Valley and culture of, at least in Japan right now, is different. And also, since you are paying out for cash, the amount sometimes is smaller in Japan. Because of course you don't have an upside, but the cash you have for startup is not so much. So many startups, I think the compensation for independent board of director is 20K or 30K. That's what I hear. And without, by the way, without stock option. So that's, I think, one of the reasons why Japanese startup are weak. They don't have stock option program. They don't employ advisor. But for example, yeah, one of the company I advise here, it's a big startup. They raised over 200 million already. And they asked me for advising that company. And interestingly, they sent me a file, DocuSign, sign this. And I received a certain stock option like in a week. And then I grabbed them a 5 million deal in 1 week. So that's the kind of things you can do as an advisor. But for some of the Japanese company, they say, I want to seek for advice. I hear nothing for a year or two. And then I can't do nothing. Of course, I can say something, but I can't help them. And so I think I want to really employ those kind of system, which is very, I think, critical, crucial, and beneficial for startup into Japanese community as well too. I think those are, I think, very good custom and the way of doing startups here.
Ray, I'd like to ask a follow-up question about Sozo Ventures. So you're helping American startup companies partner in Japan for Japan market entry.
Right.
Usually the Japan partner is a big company. Do you ever partner with Japanese startup companies?
Usually, what we recommend on Sozo Ventures is that we should partnership with a strong Japanese company because the resources you have, for example, if you think about like A or B or C round, in the US, you raise 5 million, 10 millions, 20 millions, 30 millions, and sometimes 50 millions. Meanwhile, in Japan, when you are talking about angel round 1 and A and B and C, it's usually up to 2, 3 million, maybe 5, but not so much. So the resources you're talking about for startup is very, very different. And also, if you are talking about D and E round, and also an exit or being listed in Japanese company, sometimes they got listed with 50 million valuation or 100 million. Then you can go to listed market like Mothers. Those are the kind of the target you have for exit. So usually, I think the startup in Japan, they are very small, limited resources, and also if you think about U.S. companies to globalize as well too. You don't want to partnership with someone who doesn't have enough resource to support your activity in Japan. And many startups in Japan doesn't have that resource. So I usually don't recommend Japanese startup to be their partners. And also, as I mentioned, in many area in Japan is consolidated. They are leading companies, they have shares, and they don't have innovation just because everybody in the boardroom or the company, they have been in the company for 40, 50 years. So there's a lot of great chance to implement those kind of technology to big companies rather than small. So I usually recommend big companies to partnership with.
Okay, thank you. Questions?
I have a question about your thoughts on serving as a member on the board of directors. It seems to me that the Japanese rules and regulations with respect to compliance or accounting or disclosures, the letter of the regulations and laws are pretty similar between the two countries. So not so much from the regulatory or compliance perspective, but the philosophy or the vision or mission perspective. Japanese companies seem to always have, comparing similar companies, a smaller return on equity or ROE or ROI compared to US companies. They tend to look short to long term in terms of their return. So they'll keep a lot in retained earnings for those future investments, whatever that might be, R&D or facility expansion. On the US side, though, it seems to me that originally the idea was to look out for the best interest of the company, including all the stakeholders, like you said earlier. But the bottom line is, how much money am I going to get in my return this quarter, almost, right? So it's a quarterly financial analysis that they go through, and the performance of that company is often evaluated on a quarterly basis, often based on the money aspect. And Japan is maybe not so much. They look at the business as a whole, mid to long term. So with these very different types of philosophies, and you being on the board of probably both, how do you reconcile those?
Right. Yeah. So I think your question is, U.S. have more short-term target, and I think, and also focus on more on returns. Meanwhile, Japan has more mid and long-term, and sometimes they sacrifice the profit. So how do you, how do I mitigate or balance those kind of things? I think, there's at least I think I try to look into both sides in a good way. So why Japanese company look for mid and long term is because, as I mentioned, people don't change job. So people are in the company for 40, 50 years. And then when you become CEO, the likeliness is that you're going to stay in the company for another 20 years. Because companies like Toshiba or others, you become CEO 65, and then you have the room in the company until 85. or maybe 100, seriously. So, and there's 20 of them. It's not just one. But that's the kind of thing you have. You have a boardroom, but you have completely different boardroom, like the executive you have for decades in the other room waiting for you. And so people have, so basically what I'm trying to say is it's their own interest. It's not really the company, sometimes I feel. So they try to protect, they try not to make mistakes, they try to not get those people away just because you know that you're going to be that person very soon. And you want that for another 20 years. And that is the compensation they receive. To see every CEO in listed company in Japan, it's still, I think, 200K or 300K. That's the listed company CEO's compensation. But you are expected to receive that for another 20, 30, 40 years. So that's why people can really hang on to the CEO job, just because they have another 20 years. So usually their successor is the person who is going to hire you for another 20 years and will not betray you. So I think in reality, yes, yes, I initially thought that it's really for the company, but it's really not. So sometimes that damages the company, and at the end, it's just conservative. So I think, yes, of course, sometimes people do, and they have mission objective for mid and long term, but in many cases, it's really not. So I disagree that it's really something, yeah, special, but I think there's good part on that as well, too, because you don't sacrifice the short-term thing just to make a certain money. And at the same time, I think what's the beauty of the US is, yeah, of course you are looking for short term, but it's really number driven. And sometimes I think there's qualitative and quantitative. And in Japan, it's more qualitative, relationship and all that. And in the US, it's more quantitative. You look into numbers. You calculate ROA, ROI, ROE. In Japan, sometimes people don't know about it. Even you're the CEO of the company, you just don't look into numbers. So I think there's both good side, and if you have both sides of the management style, I think it's always better. So I don't have the right answer how to balance it, but if you learn both and try to implement the best part of both sides, I think it's better. Anyway.
Okay. Ray, how are Japanese companies, big firms, doing at getting innovation from outside? Are they starting to figure out how to do this?
Yeah, I think so. Yeah, at least there's three things you see changing. So one is venture capital investment. So at least
by companies, you mean?
Both. So
okay.
they have corporate venture capital. Many companies started to do that. Office in Silicon Valley, and also they are limited partners for many venture capital as well too. So at least they want to invest money into where the innovation is. And secondly, I think R&D center as well too. So basically, not just investment, but they are trying to employ the new engineering people, not just Japanese, but outside as well too. And also they are acquiring companies who has technology. Of course, many fails, but at least you see a lot of things trying. And also I think new companies buy a lot of new startups in Japan as well too. So there's a ecosystem in Japan as well too, how those startups are going to exit. So sometimes they, of course, have a market to be listed, but many companies got bought out by big companies.
Yeah, okay. Other questions? Go ahead, Dave.
Ray, thank you for all the very insightful remarks. I want to go back, since the topic is entrepreneurship in the boardroom, and there have been some really interesting comments on corporate governance, and in particular this last question about the US and Japanese models. I think it's interesting that one of the statements you made about the role of the board, in many US boardrooms, I think that would have been an extremely controversial statement to come out and say that the role of the board is to look out for all stakeholders, and it's about innovation and it's about sustainability. There are a lot of business school professors and board members who would pound the table and say, absolutely not, our job is to be here to maximize shareholder value. And that's actually a change in the US over the last 30 or 40 years. Used to be much more consistent with what you articulated, maybe not as much the innovation emphasis. Sorry for the long introduction, but my question is, for CEOs who like the model you're proposing, who want to try to build that model in the US, and who are in an environment where that actually is a controversial model, what advice do you have for a CEO as he or she is putting together his or her board of directors?
Yes, so yes, that's an excellent question and also controversial. So yes, since my background is more on consumer products, I might be more sensitive to stakeholders. For example, if you want to have Hello Kitty product in Walmart, you need to assure that those products are not made by slaves, child slaves. And if you have that, your brand reputation all goes away. So of course, in the short term, making those products without knowing what factory it is most cost effective. You don't need to look into it. You don't want to look into it. Maybe short-term profit, yes. But time by time, people find out, and it's in the media, and you need to really cope with that. That's not us. It's about H&M, Marks & Spencer, Disney as well too. Most of the consumer products company, of course, we're talking about shareholder return. But at the same time, what is that? At the end, you need to satisfy, I think, this social environment as well too. Or otherwise, people will not buy Hello Kitty products or Disney products. So, and in some industry, you might not need it. You might not need that sensitivity. But especially in consumer products, I think we have been very sensitive about it. So how, for example, Nestle as well too. So where did that cacao came from? If you need to be sure that that cacao was not a product from slavery, child slavery. And if you buy from a market in Africa, you cannot assure that. So some cacao company has been buying a lot of forest for cacao themselves that they want to make sure about it. And also some people are implementing digital technology to make sure that this is a farm where there's no such kind of things. And I think since the world is getting smaller, I think when you talk about shareholders and also return, sometimes I think there's a direct dynamics which company and both consumers really need to keep attention on. So, and that goes back to diversity. So if you are an industrial player and you don't have direct consumer relationship, so you don't care about, no, I'm going to make this, whatever it is. But if you're in consumer products, there's a lot of things that it's already changed. It's a very different close industry, but you don't know. So that comes back to composition and diversity. So I think to have that kind of sensitivity, I think it's very important to have a certain diversification in the board, and you will have that attention because you're from the different kind of the world. You need to have that attention. And I think it's not just about consumer product. I think it can happen on all those elements as well too. Global is one. So yeah, let's. When you are talking about U.S. market and everybody's U.S., the biggest shareholder return is the big market in the U.S. But there might be a big market in China. So you're doing nothing in China. So and then if you have the diversity in the board, you will start to think about China. And also I think there's a dynamic on changing. For example, I had a chance to go to luxury brands meeting last week in Shanghai, and they were talking about like jeans, denim. So so right now, only 19% of the people are wearing denim in China. So it's going to increase in 60-80%. So what are we looking into? And also like a luxury brand as well too. It used to be in the 80s, it was 1% China. Nobody was like buying luxury brands, but it's now 30%. So sometimes you have a notion that no, we don't need to do that. But if you have a diversified board or diversified kind of information, you start to think about different kind of things. And the landscape you see, the picture you see might be very different. That's why I think diversity is very important. And with that, I think regardless of, the attention of the board, I think it's going to be widened. And I truly believe that if you have the diversity, you have more, success on making decisions. So I think the key to your question is have a diversity. Have people who are not related to your industry. And then you will have different kind of sensitivity. Healthcare is very different industry. If you are doing mobile game, it's very different. But if you have that sensitivity in the board, you will think different thing. Car automation as well too. Some people think car automation is very technology thing. But companies like Toyota, it's about life. So how are you going to save it? So you need to have that sensitivity. Meanwhile, many technology companies doesn't have that sensitivity. You need to have that diversity to think about it.
That's an excellent point to close the session today. We've got some refreshments outside. Let me recommend that we go outside for the refreshments. But first, please join me in thanking Ray again. Great talk.